Hello again, everyone. It's Andy here with Garcia Research. I just checking out the markets, and of course, we're getting ready to open up the London trading session, trading your favorite currency pairs. We're going to talk a little bit more about the opportunities that we're looking at today. It is the end of the trading week, and so far, of course, everything is a little quiet right now, just waiting for the markets to get open. As it stands, the dollar index futures is sitting right about unchanged. Markets are relatively quiet. New Zealand dollar happens to be the only one that is showing any kind of strength. The theme for the day, I would say, is dollar weakness. Let's see if it continues to show weakness across the board. It had a pretty important an important type of breakout in the dollar over the past couple of days, and now the question is whether or not it's going to continue. So let's take a look at the charts. You can see here, this is the pairs that we watch, at least for intraday activity. I can talk a little bit more about the exotic pairs, but right now it's best to take a look at the intraday activity, or the you can see the updated activity here. You got weekly charts of the dollar index and the major pairs that trade against it. Now what you notice here is the fact that the dollar index is trading near the lows of the week, for that matter. We had an important breakout of last week's trading session. You can see the breakdown below last week's low, and the market has continued to trade lower. Now, the reason why this is important is because it had an impact. You can see that it's dragging down the Swiss franc, so the Swiss franc looks like it's about to actually take out the low from last week too, and this is something that we need to pay attention to. You had the Canadian dollar here, which basically rallied up to the highs, pretty close to the last week's highs, and then actually failed. So sitting on the lows here. Now the question that I'm looking for, considering it being Friday, is whether or not the Japanese yen here is going to actually fall out of grace. So the question here is whether or not the Japanese yen is going to actually find some sellers. And so far on the lower time frames, I do have a lower high, so I'm watching the Japanese yen, because I'm short at the moment, but I have a really tight stop just in case it doesn't want to it does not want to stay down. And currently right now we're trading at looks like the previous week's high. You can see this high right here at 111.82, which is the high from 2 weeks ago. We are currently trading at that level, and I'm watching it to see if it's going to go down below it, because if it does, then that'll actually help the market move lower. Okay, so at the very least, I'm looking at these two highs right here as being support, intermediate, and the question is whether or not they're going to fall back, push down below these highs. And that's really my expectation right now, is that the Japanese yen will push down below these two highs. On the other side of the coin, pretty important to pay attention to. You can see how the euro basically broke out of last week's high, giving you a nice move there. You had 1663 was the high of last week, and now we're up at 117.14, so that was a nice trade for you if you were paying attention. And then of course the pound dollar actually had a very nice move, breaking out of 2 weeks highs above the 130.28 and then above the 130.43 level, and it continues to rally. So the British pound at this point is finishing on the highs for the week as long as it can stay up here. But this is a very, very nice move here, and you can see here that the Australian dollar is trading near last week's highs, and the New Zealand dollar back up to last week's high, inside of last week's trading range. We were looking at this yesterday and the day before, and this market was actually relatively quiet. It was sitting down below last week's low, and then of course we had a nice little turnaround. So once again, let's go and take a quick look at the intraday activity here. You can see how the dollar index, or the dollar, is trading near the lows right here. Okay, so this is setting up for more downside in the dollar. The question is whether or not we're going to bounce before we go, because we had this low that's going back to we're going back to the previous session here, right here. Now, once we break below this low, then that's going to help the market move lower. But I want to be on alert right now, because with the Swiss franc moving, this actually has caught my attention, and I definitely want to be a part of this if the market can break below last week's low. So let's go and take a quick look at the weekly chart. Okay, you can see here that we are literally, it looks like we are actually at the low. Oh, it looks like we're breaking. Okay, so what I'm going to do is I'm going to put a line at yesterday's low. Let's see here, the low is at 96.40, and my line is right at 96.38. That's fine right there. So let's move down to the 5-minute chart. Okay, and you can see here that at this point the market has pushed down below last week's low. All right, so it's time to bring this pair up to the trading platform. Anyways, this is what I want to see in terms of breaking support and resistance. Okay, this is a very simple concept, and this is why a lot of the stuff that I do is always overlooked, because people there's a tendency to look for more complicated versions of trading. I love taking simple approaches to trading the market. Okay, there's just a very easy way to approach this market, and trading does not have to be complicated. So we're gonna watch this pair for now, because we are, as you know, breaking below last week's low. We'll keep an eye on this. If we continue to move lower, then this can set up for at least a decent push to the downside. Given that it's Friday, we have a low activity level, and the other side of the coin is that you know, this is definitely not a swing trade per se at this point. Okay, so once again, just trying to see if we can get some pips out of the market for right now. We'll see how this market responds. So again, last week's low, let me go ahead and write this down. Okay, so the important thing here is to keep in mind that as long as we stay below last week's low, the plan is to continue to stay biased to the short side. This is an easy way to remember some of the basic concepts that you learn out there when you're learning how to trade is learning about support and resistance. Okay, so support and resistance is probably one of the easiest ways to trade, but a lot of people have trouble with it because they often go look for complicated ways of applying support and resistance. And what I've determined was that you know, you don't necessarily need to look further than I used to use yesterday's high and low. but now I use the previous week's high and low because I found that those levels are a little bit more. They're, I guess the word is more important. I don't know how to put it, but so this is a really easy way, and the thing is to simplify it, just to keep it as simple as possible, so that way you're not overcomplicating it. That the most important thing is not to overcomplicate it. I get constantly requests from people to help them learn how to trade, and then when they come to find out that my approaches are just simple and that I've been able to press on like this, and they seem to overlook it or think that it couldn't be that easy or something like that. So this is the bottom line here. As long as it continues to stay below 96.40, we're going to continue to look short. And then if it goes back above 96.40, then we'll probably stop. We'll either stop trading this, or we'll just look around and we can find something else. Now, the important thing about it is that I'm in line with the dollar. So as you know, the dollar was basically moving towards the lows itself as well. And so because of that, we want to focus on being in alignment with the dollar. That's the king of the hill, and that to me is vital. So as we continue to trade here, I'm going to make sure that the dollar index does not bounce at support. Remember, we were looking at the low from the previous session, and there's a possibility that we could bounce at that level. So if we do bounce, then what we'll be looking for is a response in all the correlating markets. So that means that if the dollar bounces, we'll expect a bounce in this pair right here, the Swiss franc, also the Canadian, and then the Japanese yen. Those are the pairs that I'll expect to bounce. On the flip side, I will expect the Euro Pound Aussie New Zealand to actually make some sort of a top. And so that's going to be, bottom line, is what we're going to be looking for. At the moment, the Kiwi, the New Zealand dollar, is basically the strongest pair that I'm looking at on my dashboard. When you take a look at my watch list, my watch list has the New Zealand dollar up 0.3%, and then the Swiss franc is the weakest, actually, at negative 0.2%. So here we are looking at the Kiwi, or the Swiss franc, and we're watching to see if this continues to move lower. From this point forward, what I want to see is more dollar weakness. Of course, that's going to continue to push this market lower. Just looking around at all my screens here to see if there's anything that pops up. I'm constantly watching this percentage change dashboard. The other thing is I'm scanning everything that I have to see if anything catches my eye. The other thing is to make sure that everything is basically moving the way it should be. So even though the dollar index, the futures have not started to bounce, it looks like you have a little bit of a bounce here in the Swiss franc and also in the Japanese yen. I'm watching them all simultaneously. almost about 10 minutes into the session, and the market is really quiet, to say the least. Looks like we have pretty much average trading volume, or liquidity for that matter, low average activity level. Starting to see a little bit of a bounce in the yen. Looks like the high from the previous, the high from 2 weeks ago is trying to hold right now.
If I could dumb this down slightly for 1 second, emerging markets derive the bulk of their cash flows from China, and their cost of equity is driven by the US. So the guy who drives your cost of equity is now normalizing rates, and the region that drives your cash flows is now weakening. Exactly the opposite of what was happening for 3 years. This is why your fundamental.
Just watching the Japanese yen off the side of my screen, because if that market can't stay on the lows, then it's going to leave me a little cautious here in the Swiss franc. But then again, the dollar is really all I'm concerned about. Yeah, I'm starting to see the dollar bounce a tiny bit.
Last time it was housing, which has tremendous multiplier effects. Brazil, Colombia, Australia. This time it's infrastructure, which really helps China.
Okay.
So the sensitivity of our earnings in emerging markets.
So just need to be on alert here that there's a possibility that this pair could bounce. You do have some buying tails right here, but anything's possible. Of course, we always say that the dollar index overall is sitting at a level of support that is, in my opinion, a major level. But overall, the bias should be the downside, in the dollar, because we're sitting at, in my opinion, what's been consolidation over the past couple of days.
I think that's changing for China now. That's what I meant when I said the ability of the Chinese to stimulate is also going to be compromised.
Okay, Banu, thank you so much. Very, very valuable. Banu Boeja from UBS Investment Bank stays with us. Make sure, and of course, you get your questions in for Banu.
Whenever the market is quiet, or whenever the market is not moving very aggressively in one direction or another, which it did yesterday, actually, that's the thing, is that there have been more moves during the New York session than the London session lately. And so because of that, we have to be skeptical of the market making any kind of a strong move in one direction. Looks like the pound is moving. So just remember that, like when you do have a breakout, like what we're witnessing right now, you don't necessarily have to get in right away. I mean, people always like to jump the gun because I don't know. My opinion is they like to get in first, or it's an urgency thing or whatever. There's a fear of missing the move. But what I found is that you don't necessarily have to actually get in, because typically what's going to happen is that as we continue to move lower, we're going to get some continuation patterns. We're going to get some confirmation that this market wants to move lower. And then that's where we'll actually get our setups. So at this point right now, you can see that we're just now getting started in this event, if you will, in this trading scenario, which is the break of last week's low in the dollar Swiss. And you can see how we're trading on the lows. Now, the beauty of it is that this is the weakest pair on my dashboard in terms of my currency watch list. On the flip side, you have the New Zealand dollar is actually the strongest. So the problem is that the New Zealand dollar had already made it's only trading back into last week's trading range. It's not like it's actually trading above last week's trading range, whereas the Swiss franc is actually moving into new territory. So you can see here, this is the Canadian, actually right here, this is the Swiss franc, and the Swiss franc is moving below last week's low, and it's taking out the previous 2 weeks low. Right here you can see how the New Zealand dollar is actually just pulling up into last week's trading range. So given the fact that the New Zealand dollar is on the highs, it looks less appealing here because we're actually pulling back into last week's trading range here. This is not what I want to see. I like seeing this where we're in a downtrend on the weekly chart, and we're actually pulling down below last week's low. We're looking for continuation of the downside. And so with that in mind, to me that's a much better setup, where we are moving in the direction of the order flow, the institutional order flow for that matter. Okay, so as we move on throughout the day, you're going to want to pay attention to what kind of move this is, or pay attention to the activity that you're getting here in the Swiss franc. I'm going to go take a quick look at the pound dollar here, because it looks like the pound is doing something. We're at 31.20. Okay, so this is what it was. We had a nice little spike up here real quick, and now the market is actually pulling back. So let's go take a quick look here at the daily. We already know that the weekly really, if you look at the weekly chart, we already had our breakout here. Okay, so most likely we're on the highs of the week in terms of the pound dollar. The pound is really sitting at an exhaustion point per se. I mean, it's overextended for the week. It could go higher, but at the very least, I mean, what are we expecting here? We would probably think that we're going to get some sort of profit taking, and therefore that's going to drive the pound dollar down. So when you take a look here at the daily chart, you can see that we broke above yesterday's high, but we are sitting at yesterday's high here, and this is actually a very small bar. Looks like the market is not really doing anything. Okay, so you go back to the 5-minute chart, you can see that we had nothing but a push above yesterday's high, and now we're actually pushing back below it. So this market to me does not look as appealing as the Swiss franc. Right, so watching the Swiss franc here, because this is actually a continuation of the trend based on the weekly chart. We've had a nice downtrend in the Swiss franc, and it looks like we could, accelerate to the downside for that matter if this market can get going. So currently we're trading at 96.35. exceeded our breakout point at 96.40, and therefore this market is set up to move lower.
The 625 basis point rise helped to restore some investor confidence in policymakers' independence, but will those gains be short-lived?
Now he's going back and forth, you know, because I get, you know, I get exposed to other people's trading styles all the time. You know, there's plenty of people out there trying to collect email addresses, and you know, if you give them your email address, then they're willing to share a glimpse into what kind of strategy they're using, and so you can kind of gain an understanding about what people are doing. But what I've found is that a majority of people who are intraday traders, now remember, this is the difference between intraday trading and swing trading, but there are so many different ways that you can actually skin a cat. And what I do find is that a lot of people who are intraday trading are just basically overcomplicating it. They're using probably indicators a lot more than they should. And most importantly, the biggest thing is that they're probably being overly active. Or the other thing is that they're not taking into consideration the higher time frames. They're just leaving, they may be leaving the higher time frames out of context. So I think, in my opinion, what's vital is that if you're an intraday trader, you should be trading with the long-term perspective in mind. And if you do, that'll allow you to gain, that will help you get those scalping trades, which could become swing trades. Okay, so I just got to take a quick note.
Interpreter expected. I think the markets will get long for the short term, which means for the next 1 to 3 months. Then the question is whether we see the fiscal policy also responding.
Let's go back to China. So you're saying this is less about trade, but this is basically whether China, you know, stimulates.
So the important aspect of scalping should be to scalp with the swing trade in mind, or scalp in the direction of your swing trade, because then what will happen is you get those pleasant surprises, as I like to say, in that the market will have a tendency to take your scalp in a lot further in a bigger push than you might have expected. So, you know, where you're sitting there thinking that you're going to scalp for 5 or 10, 20, 30 pips, 50 pips, even whatever. If you get a good scalp that's in the direction of your swing trade, then you have a higher likelihood of actually getting a pleasant surprise where the market can burst, have a very sudden burst in the direction of your swing trade. And then not only are you positioned for a swing trade, but you're also you know, you have the ability to choose to either take profits or to ride the trend. And you know, I've always been encouraged to trade the trend. Don't go against the trend, and it's so difficult because you don't you know, from time to time you're sitting there wondering like which direction is the trend, you know, which direction which trend do I want to participate in. And as you know, there are primarily 3 different trends. You have the long-term trend, you have the intermediate-term trend, and then you have the short-term trend. Which trend do you want to actually participate in? And what I've found is that if you participate in the long-term trend, then you're going to be able to build wealth a lot quicker. You're going to be able to take advantage of multiple scalping opportunities if you just basically take it from that perspective, going in the direction of the major trend. So we still haven't had a retest of yesterday's low. In other words, as most of you are aware that when you have a break of support or resistance, the market will have a tendency to go back and retest the breakout point. So the level that we have just violated was last week's low. And as we've sit here and traded, or sit here and monitor this price action, you can see that price has not gone back up and tested it yet. So I'm curious to see if we're going to go back up and test it. And if we do go back up and test it, that may actually be a decent setup for us to get short. Of course, I was taught that it's better to get a consolidation instead of a rejection after you break out the just want to get my notepad here. Okay, so as we continue to trade lower, what we're looking for is this market. One is that you have this breakout point. Okay, this right here. That's your breakout point.
To them. So if they were looking, if the cabinet was looking for any comfort from monetary policy, so what's your contingency plan? Actually, we don't have a contingency plan.
Now, once we get the breakout point, what I'm looking for is a retest and then a push to the downside. So once we get that breakout point, once we get a retest, then the expectation here is to wait for the market to come back up and then wait for a swing high, and then they'll get some sort of a failure here, okay, that we can actually get short. That's one thing. Another way is you're going to see people that, let's just assume this is a low, and then what they'll do is they'll wait for a breakout of this level here. Okay, so you can see how the market is actually kind of pulling back up. Let's see if it goes back up to 96.40. The problem is that we only have about 5 pips here. We really haven't done very much movement. Okay, so just got to be patient here and let the market actually do what it's going to do. That's the retest. The other opportunity that I'm looking for is some sort of a consolidation here and then just breaking down. Okay, so at that point, then what we'll do is we'll let the market actually establish a new type of trading range, and then we'll take a breakout of a lower level here. So there's all kinds of ways to actually get positioned in the trade. And what I'm liking at this point, the Japanese yen is getting rejected. We're actually moving lower, a little bit lower. You can see here that the Swiss franc continues to press lower here. Okay, so as the market continues to move, we just need to be patient and let this market evolve, because at some point it's going to give us the opportunity to actually enter into the trade, and then we can actually take a scalp based on this trade. Currently, you know, I'm up, or I'm short the Japanese yen, and I'm up probably about 3 or 4 pips. But the reason I'm watching this market right here is because I think that this is going to actually set up for a more downside move here. So about 10 pips. If you would have got in at the breakout of last week's trading session, this is an aggressive trade here to actually take the break down, to actually take the trade when the market goes below the level. That's an aggressive trade because this could be a bounce here. But you can see here that once the market closed below the level, there was a surge of orders, people getting short there, or actually just closing out their longs, or, you know, whatever the case may be. But in this sense, you can see how the market continues to slide a little bit lower, and so this is why it's really important to actually pay attention to your intermarket analysis. So again, I have the Swiss franc moving lower. I have the dollar moving lower. I'm looking at the dollar on a chart over here. I'm looking at the Japanese yen on a chart over here. And we're basically looking across the board. I have multiple screens up. And I'm watching all these pairs at the same time to make sure that they're all moving in unison. And that allows me to gain a confidence that this market is going to continue to press on. So this is an easy way to trade without indicators, is to use your intermarket analysis, to actually use your multiple time frame analysis, and then to stack the odds in your favor.
Economics, finance, and politics. This is Bloomberg surveillance on stocks and operating in London. Now, Goldman Sachs investment bankers are completing a takeover of real estate. Three of its most important roles will be held by executives who rose through its deal-making units. Last night, incoming chief executive...
Okay, looks like the dollar is making new lows here. That's good to see. Getting a quick bounce here in the Swiss franc and the Japanese yen, though.
Another rising executive, the consumer banking chief, Stephen Scher, was tapped to become the chief financial officer. And also in a surprise move, Solomon dispatched Martin Chavez, the current CFO, back to the trading division, making him the third co-head of the bank's largest unit by revenue. So we'll, of course, keep an eye on Goldman Sachs and any changes there. Now let's get straight to the Bloomberg First World News in New York City. Here's Taylor Riggs. Hi, Taylor.
Francine, in the U.S., Hurricane Florence has hit the North Carolina coast, but the full effects of the storm, which is still centered 85 miles from shore, are yet to come. Sustained hurricane-force winds and torrential rain have crashed into waterfront towns as Florence is set to make landfall later today. More than 1,000 flights have been canceled, and Duke Energy says 3 million people could lose power. It's estimated that its total bill for damage could reach $20 billion. At the same time, in the Philippines, they placed their main island under storm alert before Super Typhoon Mangkhut hits land in the northern province of Cagayan. As many as 824,000 people may have to be evacuated as schools and buses have closed. The storm is forecast to have maximum winds of the equivalent of 173 miles per hour, with gusts as strong as 207 miles per hour. Chinese state media has warned the nation shouldn't expect a quick resolution of its trade dispute with the U.S., as there have been no signs that President Donald Trump has changed his thinking. An editorial in the Global Times said that while it is good to talk, China should be aware that there may not be a deal anytime soon. The newspaper said Washington is still taking a tough attitude. Bank of England Governor Mark Carney has told senior government ministers that a no-deal Brexit would probably see interest rates rise rather than fall. Bloomberg has learned that Carney told those present that crashing out without an agreement would lead to a fall in the pound and higher tariffs, pushing inflation higher. They said he suggested that would make it harder to cut borrowing costs to support the economy, as the BOE did in the aftermath of the Brexit vote in 2016. And the U.S. has warned Russia that it may follow through on sanction threats over the construction of a major natural gas pipeline to Germany. Energy Secretary Rick Perry's comments about Nord Stream 2 come after Donald Trump in July slammed what he called German dependence on Russian energy. And we'll bring you our exclusive interview with Deputy U.S. Energy Secretary Dan Brouillette at 3 p.m. UK time. Global News, 24 hours a day on air, and to TikTok, on Twitter, powered by...
So just remember that the current trading environment right now is pretty light, which means that it looks like there's really nothing happening in London. Overall, in terms of movement, you can see the dollar index futures is down almost 0.2% now, and that's predicated. That's basically based on the Swiss franc moving lower past last week's low. You can see the Japanese yen is actually off the highs. It's kind of pulling back.
I was an EM trader at Lehman Brothers in London. By late 2007, it really became clear that we were heading towards some sort of financial crisis. I was naive enough to think that Lehman Brothers was probably the safest bank, or at least one of the safer banks. I think I was kind of brainwashed a little bit into Lehman Brothers, my first full-time job out of university, and I've really enjoyed it. I thought it was a great place to work. The atmosphere was very good. In the summer of 2008, there started becoming this idea that the reality was different to what management were possibly presenting to us, and the situation was much more dire. So on Friday the 12th, I was flying to Budapest for a work conference in Hungary on the Saturday. There were some other junior salespeople and traders there from Lehman Brothers, and I remember assuring them on the Saturday night, look, it's absolutely fine. The worst case scenario is that we get taken over by Bank of America. There was absolutely no idea that, you know what, Monday we'd have no employer and no option and no way out. So then on the Sunday, I actually flew from Budapest to Istanbul, and I remember we arrive in, and I see on the TV screens Lehman Brothers to file for bankruptcy in the morning. And I turn on my BlackBerry kind of in shock, and I get all these messages from people from New York, ex-colleagues in New York, going, it's been great working with you, see you on the other side. And I'm like, whoa, I think I've just lost my job. Leaving Lehman Brothers wasn't my choice. I really thought there was no chance that Lehman Brothers would be allowed to fold, and I think that after that I became much more cynical about the global financial system. I never actually got back into the Lehman Brothers office again after September 12th. So it was actually a colleague who had to bring a box of my collections out for me. So I wasn't one of the people carrying boxes out. I never got to do that. History rhymes, it doesn't repeat. So do I think we're going to get a Lehman Brothers in terms of another bank going down in the years ahead? Not any systemically important bank, no. Regulators are too focused on that. Will we get another financial crisis? Yes, I think probably. What's happened in every crisis before is people just didn't believe a crash could come. It's like the 1929, the Great Depression, the collapse then. You know what is after the Roaring '20s, when people just got so excited they didn't understand the downside, and everyone got caught up in the greed. As long as humans dominate the financial system and financial markets, which they still do, not for much longer, I think we will get financial crises.
Well, that was our very own Bloomberg and live strategist and former Lehman Brothers trader Mark Hudmar walking us through the collapse of Lehman. I think it was really fascinating. We'll also push it on social media. We're just getting some breaking news out of President Erdogan of Turkey. He is speaking in Ankara right at the moment. He says the political reasons lie behind the lira's decline. So this is a President Erdogan that seems to be under attack once again.
Let's take a quick look. I want to take a quick look at the major pairs here. So let's go look at the Aussie, the Australian dollar. It looks like it pulled off the highs here. Okay, so this is a little bit of a retracement, which is adding to a bounce in the dollar right now. So there's the Aussie. Go look at the euro. Euro doing the same thing. 117.19 is a high, and now we're trading off the highs. It looks like this is setting up for a move back to the downside. So we got to be careful here with getting excited with dollar. Looks like the dollar is actually finding a little bit of a bounce here. Pound dollar here is a little bit more choppy. Nothing really showing anything there. New Zealand dollar off the highs here, so this is an important type of setup here. It looks like we're getting some downside push here in the. Let me get out of that. Alright, so it looks like we're gonna have to switch gears here. Canadian dollar rallying, so that's definitely what's pushing the dollar higher right now. Okay, we might actually have to be on alert here. Looks like the dollar index futures is going to start bouncing. Looking at Canadian, or here's the Swiss franc, and then the Japanese yen. Japanese yen looks really quiet, but you can see here that the dollar came down to, look at the double bottom low here. Okay, so this is something to be really got to pay attention to this stuff, otherwise you're going to get caught off guard, and then the market's going to you're essentially going to get your money taken. Okay, so at this point you got the Japanese yen trading at the high from a couple weeks ago. You have this bounce in the Swiss franc. The Swiss franc is actually bouncing right now. Okay, very aggressive bar here, very aggressive. Now, if the dollar is going to continue to bounce, then you know that would suggest that the dollar is going to continue higher. Therefore, what you need to do is you need to be trading the strongest pair against the dollar. And we've just now seen that the Canadian dollar is actually the strongest. You can see right now this just continues to show strength. Let me go take a quick look over here at. You can see that the dollar, or the Canadian dollar, is coming off the lows here. So even though the Canadian dollar is coming off the lows and it's relatively not the strongest, the actual strongest is the Japanese yen. The problem with the Japanese yen is that the Japanese session is almost over, or just it is over now. So don't want to be really trading that. I'm more interested in probably looking at probably getting long the Canadian dollar. So we'll keep an eye on this closer here. Let's go and take a quick look at the weekly chart, and then we can actually identify last week's low. Okay, so we still haven't gone above last week's low. We got a ways to go. Looks like 130.42 is last week's low, so we have a long way to go before we can actually get there.
Let me ask you, Banu, and I just want to get some of those other comments from President Erdogan in, if the next crisis will come from the emerging markets. And in the meantime, on Turkey, so President Erdogan saying the central bank has made a very high rate increases. Of course, we saw it was 625 basis points. The president saying we'll see the result of this independence, and he's also saying he's patient.
All right, so let's see here. Looks like we have the potential. Looks like a reverse head and shoulders down here. Okay. So I'm really cautious here about getting short the dollar. Swiss franc though just got rejected at last week's low. Okay, so this is a good sign. Continue to keep an eye on this here to see if it continues to move lower.
So there has been a secular decline. I think this is very unhelpful. We spoke earlier in this program about we need to wait and watch whether other policy will undo the damage. I'm afraid it's already begun to do that. Okay, can I come in there? Because I do so agree that we've done.
This is the nature of pretty much like trying to squeeze juice out of a dry lemon. Whenever the markets are not moving, you have a tendency to actually overwork, or run into issues where the market does not want to cooperate. So in these circumstances, most of the times it's just best to sit on your hands and then wait for the next trading session. But this is where you separate yourself from people that are actually losing money is when you make these subtle decisions to actually, stay out of the market. You have to know when to stay out of the market. Just writing down some key notes whenever I have a smart thought. I want to write it down because I think it's something that should be that I should share, and it's not original by any means. I mean, it's just something that I've been taught, that's been passed down the line, and I can promise you that when you go out, and if you're learning trading from anybody out there, they're going to tell you that you need to learn when to stay out of the market. I mean, it's not rocket science or whatever, but because we're not conditioned to think that way. Everybody comes into the trading arena thinking that they're going to shoot, and they're gonna kill, and they're gonna basically run around like a gunslinger, and that's just not the case. You need to be very patient. You need to be diligent. You have to be very picky with when you're taking action. Okay, so there is a lot of time that we do sit and wait for the markets to line up like they did yesterday when the dollar was definitely making its move.
Central banks and rates. Actually, his comments mean that the currency is now reversing. So reversing gains as Mr. Erdogan commenting on the currency's decline. We can see Turkish lira to the dollar 6.1051. We also need to talk about Hurricane Florence. We had our briefing by Stuart Wallace about how farmers are trying to protect their livestock. Of course, we worry about human life at the moment.
They have to say that. This is why they'll say, you'll hear the phrase that cash is a position, and it's very true actually. I'm actually writing that down to make sure that I can, this is something that you can that I can do a blog post on. But as you can see here, the market right now, we are actually getting a nice little rejection at last week's low. This is what we're talking about in terms of the market going up to last week's low and then using it as a rejection. So this is a good confirmation that the Swiss franc continues to trade near the lows. Remember, the major trend in the Swiss franc is actually lower. If you go back and take a look at the weekly chart, we are at a significant support level, and in fact the market should continue to move lower. Problem is that the dollar index is basically finding a bounce right now, so it could be a short-term bounce, and then when the dollar move resumes to the downside, then this is the pair that could actually get hit. So I still think that there's plenty of room to move here.
watching Bloomberg surveillance on France and Lapa here in London. Now we're just getting some live pictures of President Erdogan actually speaking in Ankara. He's saying the new public hires will be at the level of new retirees. So he's talking about the bureaucracy after having talked about central bank. This is what he said just moments ago, that he's following development of the central bank, and he says we'll wait and see. He's also saying that financial firms' survival depends on real sector survival. But actually, of course, the headline of the moment is what he was saying about his patience being up to a point on central bank and rates, and he says we'll see the results of this independence. This, I remind you, is on the back of what the central bank did yesterday, really defying the president and doing that 625 basis point move. So still with us, Banu Baweja from UBS Investment Bank. Banu, I'm unclear about how this will play out, right? First of all, does the president have the authority to shut down the central bank? Or would that be suicide?
For the president, no, it wouldn't be suicide for the president, and yes, he does have the authority to shut down implicitly or explicitly the central bank. So again, it just emphasizes how heroic yesterday's central bank actions were, and again, this is not helpful in that you're already compromising what the central bank has done yesterday. When typically you get policy to meet its end when fiscal and monetary policy and policymakers all act in concert, right? Less than 24 hours after the central bank has done the first time, let me remind you, the first time they've gotten ahead of the market, I think this really dilutes the impact of what, because you don't know whether the central bank will completely have
back above last week's low here. Okay, so now the question is whether or not we're going to use it as support. Remember, these levels, they do transition between one identity and another. That's why they always say that support can become resistance and resistance can become support. Okay, so that as long as we can stay above it, then we'll continue to look for more upside. But then again, you can see here that the market could actually be sucking in people that are willing to get long at this level. My contention is that this could be a swing high that's forming up here. Basically, we're just looking for rotation to the downside, but let the market prove it to us. We're going to let the market actually demonstrate what it wants to do. The market will be showing its hand at some point. The problem, like I said, is that you have a bounce in the dollar. The dollar is bouncing. So Swiss franc, I took off my Japanese yen because these markets are not confirming. They're not staying, doing what they should be doing. The liquidity level is low. Remember, when the market is on fire or when the market is moving significantly in one direction, you're going to actually know it. I mean, you're going to feel it. You're going to see it. And these moves are just going to continue to they're going to continue to force themselves in one direction or another. You're not going to be able to get a retracement. You're not going to be able to get any kind of a pullback that you can get positioned in. So you by nature are stuck chasing the market. Alright, so as we sit here, I got the Japanese yen climbing, and I bet you the Canadian dollar is still climbing. Okay, so we're sitting at a breakout point in the Canadian dollar. Right, this high right here, if you can go back above 130.03, that's going to help encourage more people to buy. We already had our first breakout point here at 129.94. Fantastic. So market holding here at these lows of 129.82. So if we get a pullback down into 129.94, that would be actually a decent opportunity to test the long side.
Investec plans to spin off its asset management business after a strategic review found there is little synergy with the company's specialist banking and private wealth management divisions. The plan to separately trade Investec Asset Management in London with a secondary listing on the Johannesburg Stock Exchange follows a similar step by the insurer Old Mutual. Investec CEO Stephen Kosek joins us for an exclusive interview, 11:30 a.m. UK time. Jeff Bezos and his wife Mackenzie have launched a $2 billion fund to help homeless families and create a network of nonprofit preschools in low-income communities. Bezos says the Days One Fund will use the same principles.
Just about 10 minutes to the top of the hour.
In an exclusive interview for Bloomberg's David Rubenstein show, he also warned that it is dangerous for politicians to attack the media.
It is a mistake for any elected official, in my opinion, I don't think this is a very out there opinion, to attack media and journalists. I believe that it is an essential component of our democracy.
And that's the Bloomberg Business Flash. Francine?
Thanks so much, Taylor. Now, in December, Bitcoin hit its peak price of more than $19,000. It's now trading down more than 60% against the US dollar. But how are Bitcoin miners faring during this time? Well, Argo is the first cryptocurrency miner to list on the London Stock Exchange. The company's share price.
Okay, you can see here, this is a this has been nothing but a fake out so far. The fact that we pushed down below yet last week's low in the Canadian in the Swiss franc. So this is kind of the opportunity to where we evaluate and determine whether or not we're going to actually go with the flow in the opposite direction, or if we're going to actually just kind of ignore what's happening and go look somewhere else. Euro is down at 117.05, down from I think 117.20.
Okay, so when does that happen, the mass market potential, and what do your investors ask you?
Yeah, I think the mass market potential comes when people actually start to simplify and understand what crypto and blockchain is. And what it is, and I think it's a very good week to discuss it, is it's a reaction to what happened 10 years ago, which is that centralized control of ledgers has some downside, right? In the mortgage crisis, an example is banks and governments. In lending, the reality is that by centralizing ledgers, you have a tax and a toll and censorship. And Bitcoin is a good example of a decentralized ledger, which has a really important feature, which is censorship resistance. And when people start to understand the power of that, I think it will become more mass market.
But does it need to be regulated in the meantime? Otherwise people freak out.
I think investment into it has to be regulated, which is why we chose the route of the London Stock Exchange, one of the most reputable stock exchanges in the world. And I think that people need to understand what they're getting into as you would in any investment.
Jonathan, London has aggressively pitched itself to kind of be the place where emerging market companies list. Should they do the same as crypto?
I think they have. I think Argo is a good example of the London Stock Exchange saying our doors are open for a company that's looking to...
Okay, so 5 minutes to the top of the hour. Now, if we, as you can see, what you want to pay attention to is if you can use this level here, the Swiss franc, as resistance. Okay, so remember we broke down on a big push to the downside here, broke down here, and then actually it looks like we established a bottom or a low, came up to the market the previous week's low, and now the question is whether or not we're actually using it as resistance. Now if we continue to trade off of this level and then move lower, then what you're going to do is look for some downside with continuation patterns. Chances are that what you'll see is that the market will actually drift lower, and you're going to see kind of what we're seeing now, but the idea is that we want to see some sort of a flag set up. And at that point, that's when we'll actually give it a shot. Okay, so the breakdown of the flag is where we're actually give it a shot. Right now we're just getting a confirmation that, hey, there may be some resistance here and the market could actually go lower. There's no need to actually jump the gun because the market hasn't proven to us that it wants to stay lower. So the idea is to let the market actually tip its hand, to let it prove to you that it wants to stay lower, and therefore allow it to do what it needs to do in order to present to you a valid opportunity. And in this situation, or in most situations, that's really all I'm looking for, is a continuation pattern after we get the rejection. So if the market doesn't want to cooperate, then that also gives you the basis that you need to actually look for a move in the opposite direction. Looks like we had a spike in the pound. Okay, so pound dollar is back on the highs here. Okay, nice push off of that low at 31.22, 31.20. And sure enough, that was actually the test of the breakout point. Looks like that's where we should have been paying attention. Okay, and sometimes that's the case, is that the market has a tendency to fake you out in one market and then press hard on another. So you can see here that we had a breakout point here. Okay, here's your breakout point. Market rose, rallied, came down, and actually retested the breakout point. This is the textbook definition of a retest after a breakout. Okay, so the market rallied above the previous level of resistance, came down, used it as support, came down twice and used it as support, and now we're on our way. So looks like this may be the actual market that we should be paying attention to. And that has a tendency to be the case because whenever whatever financial center that you're actually looking at or currently that is currently open, that's predominantly the currency pair that may be the most active. So for this situation, you can see here that we are talking about the London business business hours are open, and so chances are that the pound is going to be moving. But hey, there's opportunity all over the place, and that's why you just need to pick one and go with it. There's the move down. Okay, so Swiss franc is actually giving us a little bit of confirmation here, and now what we're gonna do is look for a continuation pattern. If we can get the continuation pattern, then that may actually present a decent opportunity to get short the Swiss franc. At the same time, you have the pound dollar is basically moving higher. Australian dollar is moving higher. New Zealand dollar is moving higher. Euro dollar is moving higher. So just be on alert here and keep an eye on more dollar weakness. So as we continue to trade, that's the basis of what we're looking at, is looking at support and resistance for the simplest opportunities that we can find. There's no need to overcomplicate things, because if you're just focusing on support and resistance, you can see that there it gives you plenty of opportunity to trade. With that, folks, this is Andy. I'm going to sign off, and I'm going to concentrate a little bit more on what's going on here. And I hope you are enjoying the trading here. Good luck in your trading out there. Have a great weekend. Be sure to like, comment, subscribe, and then if you have any questions, reach out, mail at garciaresearch.net. We'll talk to you next time.
The natural gas network there is